Welcome back to the channel, guys. Without further ado, let's get into today's video. Today we're talking about Toshi, but more importantly, we're talking about the overall state of the crypto market, how narratives form, how emotions trap investors, and how you can position yourself intelligently instead of getting caught chasing hype. If you're new here, I talk about crypto every single day, and my goal is simple. I'm here to help you navigate this space, protect your capital, and identify real asymmetric opportunities when they present themselves. Because the reality is this: most people don't lose money in crypto because the projects are bad. They lose money because their timing, psychology, and expectations are completely broken. And Toshi is a perfect case study for that. As you can see on CoinMarketCap, Toshi's all-time performance is up roughly 892%. Now, on the surface, that number alone already tells you something important. Projects don't move nearly 900% without strong narratives, organic adoption, and a meaningful amount of conviction from holders. But numbers without context are dangerous. About a year ago, we saw that massive rally where Toshi went from roughly a $130 million market cap all the way to just under $940 million. That move didn't happen randomly. It was fueled by strong momentum, Coinbase attention, the rapid rise of the Base ecosystem, and a broader speculative environment where meme coins were outperforming fundamentals. This is where most people start making their first mistake. They see a project move 7x, 8x, 9x, and instead of asking how much risk is now priced in, they ask, how much higher can this go? And this is why I keep saying this, guys. Who you surround yourself with in crypto matters more than almost anything else. If at that time, you were only listening to people saying Toshi is going straight to 5 billion, Toshi is a guaranteed $10 billion project. No pullbacks, only up. You need to understand something very clearly. Most of those people were not speaking from logic, data, or market psychology. They were speaking from emotion. They were speaking from a place of being heavily invested, wanting price to go higher, and needing new buyers to validate their own decisions. That doesn't make them evil. It makes them human. But in markets, emotion is the most expensive currency you can trade with. Here's a truth most people refuse to accept. When a project goes up close to 1,000% and approaches a $1 billion market cap, the most likely outcome is not continuation, it's distribution. Why? Because $1 billion is not just a number, it's a psychological milestone. At that level, early investors are up life-changing amounts. Smart money starts de-risking, and liquidity becomes an issue. That's exactly what happened with Toshi. We said it clearly at the time. As Toshi approached that billion-dollar level, profit-taking was inevitable, and smart investors were doing exactly that. Would I have loved to see it blast straight through to $5 or $10? Of course, but markets don't care about what we want. They care about incentives and psychology. This brings us to one of the most important concepts in crypto. Market psychology beats fundamentals in the short term, every single time. This is where tools like the Fear and Greed Index become critical. Over the last few months, fear and extreme fear have dominated the market. And here's the part most people get wrong. Fear doesn't mean the project is dead. Fear means participants are emotionally exhausted. In hindsight, every single time, those periods turn out to be the best accumulation zones. Not because price is guaranteed to go up tomorrow, but because risk to reward becomes skewed in your favor. Let's zoom out, look at the yearly chart. Every major fear zone, November, April, mid-cycle pullbacks. All of them presented long-term opportunities. Even if you accumulated imperfectly, even if your entries weren't perfect, you'd still be up significantly today. This is something newer investors struggle to accept. You don't need to buy the bottom. You just need to buy when others are emotionally incapable of doing so. Now, I've been very vocal about this, and I'll say it again. I do not believe Ethereum going back to $1,500 is likely. I do not believe Bitcoin sub $70,000 is sustainable long-term. Bitcoin under $100,000, in my opinion, is still an opportunity. Look at April. Bitcoin dropped into extreme fear around $76,000. Sentiment was destroyed. People were calling the cycle over. And then what happened? Bitcoin ran to new all-time highs. That wasn't luck. That was psychology resetting. And right now, you're being given another opportunity. This is where many people misunderstand portfolio construction. Bitcoin and Ethereum are not your 20x moonshots. They are your volatility hedge, your capital anchor, your survival tools. They are what carries your portfolio through drawdowns so that you're still alive when real opportunities appear. Think of them like ETFs in traditional markets. They're not exciting, they're essential. Now let's talk meme coins. Specifically on base. Meme coins do not move in isolation. They move when Ethereum runs, liquidity expands, risk appetite increases. Right now, the base ecosystem does not have enough volume. That's not bearish, it's neutral. For volume to return, ETH has to lead, and I do believe it will. But until that happens, expectations need to stay realistic. This is where I want you to be extremely careful. When you hear influencers calling for 50B, 60B, Toshi valuations, ask yourself one question. Are they still buying at these levels, or are they selling into your excitement? Here's the uncomfortable truth. Many influencers say they're holding to $50B, but they're taking profits at 5B, 10, or even earlier, and they never tell you. Now let's be clear. Toshi is a solid project. It grew organically, without heavy KOL manipulation, with real community participation. At the current price, from an entry to exit perspective, it's attractive. At around $136 million market cap, just a return to all-time highs near $940 million represents roughly a 582% gain. That's not hopium. That's math. Personally, I can realistically see $2 billion, potentially $5 billion, maybe even $10 billion this cycle. But here's the key. I want to see it reclaim and hold above $1 billion first. That's confirmation. Could it go higher? Yes. Would I love 20? Of course, but hope is not a strategy. One of the biggest reasons I still respect Toshi is this. It's not just a meme coin. The launch of Toshi Mart adds real utility. Projects like Yuki launching on Toshi Mart show that the ecosystem is growing, builders are involved, and the team is executing. This matters long term. Let's be honest, this is not base season yet. Liquidity is still thin, volume is still concentrated, only a handful of meme coins are seeing consistent inflows. That will change, but only when Ethereum leads. Patience matters here. When you hear people screaming supercycle, while fear and greed is pushing into greed territory, be careful. Historically, euphoria marks local tops. This time is different, marks exits. Loud confidence marks distribution. Smart money is quiet right now, though I like the structure. Higher lows, higher highs, controlled volatility. This is what healthy consolidation looks like. More than a 5x back to previous highs on base is, in my opinion, a no-brainer setup. If risk is managed properly. Conclusion, as always, this is not financial advice. Do your own research, protect your capital. If you found value in this breakdown, comment, like, subscribe. I'll see you in the next one.